Hi, it's Nero here from Investment Rise. And is the Sydney property boom officially over? Well, apparently it is, according to these experts. So today I'm going to cover why people think the Sydney property boom is over. Number two, then, what that means for you as an investor, and are you still able to find areas with good capital growth? And if so, how do you go about doing that? And then number three, what the government is doing to continue to prop up the property market. So let's begin by first looking at why the Sydney property boom is officially over. Sydney's real estate boom is officially over, experts say. And this article is from March of 2022. After 2 years of soaring values and incredible sales results, experts have ruled Sydney's pandemic-induced real estate boom officially over. Speaking to the Daily Telegraph, auctioneer and real estate industry coach Tim Panos, who calls about 15 auctions every weekend, said there had been a significant shift in market conditions in recent weeks. Auctions in the New South Wales capital are passing in without opening bids. Clearance rates are falling, and more properties are taking prior offers with conditions only likely to get tougher if interest rates rise later this year, as predicted. The boom is 100% over. In February, we went from nuts to normal, Mr. Panos told the paper. Now, if you ask me, as we move from March into Easter, we're going from normal to value declines. While $10 million plus properties are showing resilience, 90% of the rest of the properties in New South Wales markets have been impacted, Mr. Panos said. In September, there was the fear of missing out, but now for buyers, it's been replaced by fear of overpaying, he explained. So this article references a single expert talking about the broader Sydney market, okay? And I would tend to agree with him in that, saying that generally for Sydney, the property boom is over. But does that mean that you can't find suburbs that are going to buck the trend, suburbs that will rise in value in Sydney even while the broader Sydney market slows down? You absolutely can, but you need to start looking at a few key factors. So let's have a look at this article from the Australian Financial Review, which says, the suburbs where house prices will rise as stock dwindles. And again, this is also from March 2022. House prices are poised to jump higher across a number of suburbs such as North Sydney, Stanmore and Freshwater in Sydney as their inventory levels fall below 1 month's worth of stock, new research shows. Now, the AFR does not tell us the source of this research, but it does highlight something, so let's keep going. Belmont and Highton in Geelong, Conda and Everett in Canberra, and Dapto in the Illawarra region could also post strong price growth in the months ahead despite the broader slowdown in values across the capitals. Most of these suburbs are undersupplied because owners are holding tight, said Kent Lardner, director of suburbtrends.com. When you consider how many properties are owned for 10 years or more in these suburbs, the proportion of off-market homes is much higher. When inventory levels and days on market are low or trending lower, this places upward pressure on prices. While we may see many parts of Australia at peak or starting to reduce marginally, these suburbs still have potential growth. Now, this isn't advice. I'm not recommending that you go and buy in these areas specifically, but what this article clearly shows that when you focus on some key metrics, primarily around supply and demand, you can identify individual suburbs with still good growth potential. It all comes down to your research. And so the thing to take away is that you don't want to be guided by the headlines in the mass media talking about price corrections across the broader market, okay? There are still individual suburbs that are going to do better and will still rise in value, even in Sydney. But remember, we're just talking about the Sydney market here. Just because the Sydney market is slowing down does not mean that the rest of the country is necessarily going to cool, or that all the other markets around the country are going to cool and go flat. Okay, some people seem to have this sort of misnomer that Sydney leads the country, so therefore, whatever Sydney does, that's what the rest of the country is going to do. that couldn't be further from the truth, because the factors that determine capital growth in each of our different markets are actually different. Okay, and right now there are many markets around the country. I've spoken about this in past episodes that, for example, generally Adelaide, generally Brisbane, if you're focusing on capital cities, but also many regional areas are still growing quite strongly because they are undersupplied. Some of the key supply and demand metrics are very much in favor of you as an investor. Okay, so don't be misguided by thinking that the Australian market will reflect what's happening in Sydney. At the same time, don't think that just because the broader Sydney market is slowing down, that you can't find individual suburbs with good growth potential if you want to stick to Sydney. Okay, which means you're going to have the budget to afford. Okay, and that might sound obvious, but if you're someone who's looking at a slightly lesser budget, the odds are you're going to get much better capital growth looking into either our smaller capital cities or regional areas, which I expect will lead the way from a capital growth perspective in Australia for the coming little while. All right, but at the same time, while we've got a shifting of market conditions right now, and so that means that you can no longer apply the strategies that you may have applied in 2020 or 2021 to the market in 2022, we also have the government putting in money, inserting funds to stimulate demand to prop up the property market. Okay, because the property market is huge. Okay, it is bigger than the residential real estate market, is bigger than commercial real estate, all our superannuation funds, and the share market, the Australian share market combined. Okay, residential real estate is bigger than that. So it's a big market, and so expect the government to try to continue to stimulate demand, and they're doing it right now by helping first home buyers. Check this out. Federal Budget 2022, First Home Buyer Scheme to be expanded. Tens of thousands more young Australians will be given a leg up to enter the housing market in tomorrow night's federal budget, with a major expansion of the Deposit Guarantee Scheme. The scheme, which cuts the deposit required to buy a home to 5%, with the government guaranteeing the other 15%, will be more than doubled to 50,000, the Herald Sun reports. The 50,000 places will comprise 35,000 for first home buyers in major cities, 10,000 for those wanting to buy or build new homes in regional areas, and 5,000 places for single parents either buying their first properties or trying to re-enter the housing market, who can receive a guarantee with a deposit of just 2%. So that shows you that the government will continue to try to stimulate demand, keep demand strong to prop up the property market, even while Sydney and I think next Melbourne will start to slow down. Okay, but remember, these schemes are not based on just Sydney or Melbourne, they're nationwide, which means you have markets that are rising right now, and in those markets, certain buyers are eligible for these first home buyer schemes, which is only going to continue to increase demand in those markets. So the takeaway message here is this. Don't believe the broader headlines. Sure, you might want to use them for guidance in terms of going, well, do you want to attack, or target the broader Sydney market right now? Or do you want to maybe look at other markets around the country? Okay, but always remember that you don't invest necessarily in a market or a city, you invest in a particular suburb. All right, and so you really want to get your research down to that granular level of granularity, okay? So then you can give yourself the best chance of finding areas with good capital growth, the rental returns that you're after, because otherwise your choices are what? You're going to sit out the market and then potentially look back in 2 or 3 years with regret, wishing you'd bought in 2022, or you're going to just buy blindly, hope and pray, and perhaps then come unstuck and then say, oh, this property investing thing's too risky, it doesn't work. Okay, the fact is you can't really speculate anymore. I think if you're a speculative investor, someone who's more of a risk taker, I think now could be a bit of a uncertain time for you. But if you're a low risk investor, you'd focus on your due diligence, you focus on your research. I still believe you're going to find some great opportunities in 2022. Hi, it's Nero here again, and thanks so much for watching. If you like what you saw and you're looking for a proven recipe, a blueprint on how to build a property portfolio that gives you passive income, then click the link below this video and get a copy of my book, Wake Up Wealthier, How to Build a Property Portfolio that pays you an income each and every month. Okay, when you click the link and you download your book, you can get both the digital version and the audio version in case you don't like reading. All right, so I used to sell this book for $49, but right now I'm making it totally free. Why? Because I want more people to get this information, and I know that a segment of you will then like what you see in the book and choose to reach out to find out more about our services. But even if you don't, if you're serious about building a property portfolio that pays your passive income, then you really want to get my book, Wake Up Wealthier. It contains the secrets that I have fine-tuned over the last 19 years. It's totally free for a limited time. Click the link below.